Let's review our trades for today. Today it is Tuesday, July 11th of 2023. We did multiple trades in our main option trading account. First, you see we closed out the XLE July 21st $76 cash secure put option for 9 cents per share. We pocketed almost all of our premium, and with there still being about 10 days left before the expiration, decided to close it out and look for opportunity to go back in later. We also bought to close the PYPL July 21st $62.50 put options, paid 7 cents per share. Again, another position we've pocketed pretty much all the profit with a week and a half left. We want to be out, and we don't really want to be in PayPal as it's scheduled to announce earnings in early August if TC2000 is accurate here. The next trade is UPS. This is another company that is announcing earnings. However, we're going to stay in it because we're in a covered call. We'd like to get this covered call strike price rolled up, which is what we're able to do. So we did two things here. We rolled our cash secured put option and our covered call out 1 month to August and rolled it up to the 75 strike. So we bought the 170 cash secured put option that expires in July and the 170 covered call option that expires in July, and sold the August 18th 175 cash secured put option and the August 18th 175 covered call option. Pocketed $238 minus commission. So let me show you why I decided to go ahead and roll that strike price up. Now, starting here on the hourly chart, first we see that UPS is in a nice uptrend. Now, if it does come down, do expect it to come down to this area right around here around 177. And that would still be above the 175 cover call strike price and put option that we sold. Notice here on this bottom left chart, the daily chart, that UPS has now made a higher high. It's made a higher low. So it appears that this downtrend that it was in is reversing, at least on this daily chart. Keep in mind that UPS is scheduled to announce earnings. If TC2000 is right, then around the 8th. Not sure if that date's been confirmed yet. Now, looking over here at the weekly chart tells a little bit of a different story, as we see that it's still in a downtrend on this weekly chart. We see it made a lower low right here. So a couple months ago, it made a lower low. Now, buying volume's been pretty nice, but we have had some strong selling pressure. Several weeks ago, about a month ago, we had some strong selling pressure, but it appears the 200 moving average is serving as support. So in case UPS decides to go up to its recent high of around 200, decided to go ahead and roll this 170 strike price up to 175. So we're able to do that. Still get a decent little credit for doing that roll. The next one is Nike. It's a new position we're in. Been watching Nike. The charts are a little interesting. I'll show you that in a second. But we just did a bullish put credit spread in Nike by selling the August 18th $100 cash secure put option and buying the 80 put option with the same strike price. Pocketed $1.02 per share for that bullish put credit spread. So these charts are a little bit all over the place. This is why I've been waiting to do a trade in Nike, but I finally felt comfortable enough to do it. Our selection is fairly slim on potential trades because of earnings, but I am comfortable with Nike. I like the company, I like their products, and the charts line this up, so I think we're okay with this trade, and that's why I decided to go ahead and move forward with it. Hourly chart's kind of a mess, so we're not even going to really look at that. We do see that the selling pressure has declined and is back down well below the 50 moving average on this hourly chart. Otherwise, there's not much really to see here to decipher if this was a good trade or not. Now, looking here at this daily chart, this is what I've really been watching. Notice it had a big decline going back to May. It was a high right in here around 128, 129. Nike then proceeded to decline almost 20% down to 103. And since then, it's kind of been trading sideways. Since going back to the end of May, it's kind of been trading sideways. It hasn't really gone anywhere. It did have a nice rise in price several times, but both times found resistance at the green 50 moving average. So what I'm anticipating it to happen is to possibly do that again now. And if it does, then we may be able to get out of this trade fairly fast. We'll have to see. Now, notice that over the past week, as the candlesticks were moving down, as the price is moving down, these volume bars were also declining until yesterday. It was a green bar and was an up day, and today also ended up being another green up day. See the candles have made a higher high and a higher low. So that looks good as far as the candles. The volume is not very high, which tells me to be cautious here. And that's why I sold not the 105 strike, but the $100 put option. That gives us room to be wrong. You can drop $7.40 per share from where it closed today, and we're still okay. Notice that Nike is not scheduled to announce earnings until October, so we're good as far as earnings as well. But we do want to be careful here. We'll add this position, but we will do it slowly, because over here on the weekly chart, we see that it is in a downtrend. See that it did make a lower, see it made a lower low, and it appears to have made a lower high. But over the past couple months, it does now appear to be selling and finding support right here on this area, which if you look back, going all the way back here to June of last year, so a little over a year ago, this area right around this $100 area where we sold our cash care put option started to support. Also started to support for it right back in here around this 104, 105 area. And then over the past 2 months, it's been finding support there as well. Notice the nice strong volume. Notice that before the decline, as UPS was declining, the volume was picking up. Then once it reached this area right around 103, 104, the volume picked up drastically as buyers came in. And when the sellers sold the stock down, buyers bought it back up. The next week was a lower volume week, although it was still above average. Then the week after that, so right at about 5 weeks ago, so we had a nice strong up candle, but it found resistance at this 200 moving average. And since then, it's kind of been trading in this little zone here, stuck between 103 and a high up here around this 200 moving average of 115. So these two charts are what made me feel comfortable doing this position, and also the fact that we're able to sell it out of the money. Now, it's not the initial return we'd like to get, but I do plan to get out of this position early if we get the opportunity to, and that will definitely increase our return. And finally, another cash care put option, we sold the XLU, the August 18th, $64 put option for 72 cents per share. Again, not the return we like to get initially, but with there being a little bit of slim pickings on what we could trade, we're going to take what we could get. So this is an ETF. It's the utility sector ETF. And the chart here, you can get some things out of it, but it's a little easier to see what I want to share with you in this daily chart. So notice that XLU is in a wedge. And when we did this trade, it was trading right about in here, around 65.5 or so. It did end up a little bit up on the day. It looks like it ended up 1.21% for the day. Notice of the past several days, as XLU has been declining, our volume's been declining. So we like that. That means sellers are losing excitement to sell, which makes sense because it's reaching the lower part of this wedge. And this wedge goes back pretty far. If you notice here, it goes all the way back here to 2020. So the base of this wedge goes pretty far back. We have several areas of support. Not only do we have this leg here, this bar here on this wedge, but notice this area right in here, right around where we sold our strike price, right around 64. This area served as support for it and resistance multiple times. We see that going all the way back here to 2019. The fall of 2019, it served as resistance for it. And then served as resistance for it here, going back to 2020, multiple times. It finally broke out above it, and since then it's been serving as support for it. So the question is, will it serve support for it again? Well, it looks like the odds are it most likely will. Of course, there's no guarantees, but the odds are that it looks like, as of right now, looks like it will. And the reason is down here in the volume section. Notice we have nice buying pressure over the past 2 months from buyers. So we'll have to see what happens at some point. It's getting really tight in this wedge down here. And once it gets tight like it is now, it's either going to shoot up or it's going to shoot down. So we'll see which way it goes. And I will look to add to this position. Utility sector is a fairly conservative sector, known more for their dividends. So it's a sector I feel comfortable being in. If it were to decline below here, then it's something we could work with and collect some nice premium if we turn them into covered calls. So that's our trade for today. We are looking forward to next Friday, which is the big option expiration day. We have quite a few positions we'll close out like we did some today. And of course, we're always looking for new opportunities. So that's all for today. I hope you have a great evening.